Most cash flow surprises do not just appear out of nowhere. They're usually building for weeks or even months ahead of time. And the problem is, most business owners cannot see them until they're standing right in the middle of the problem. And that's not because they're bad business owners, it's because they've never been taught how to see 3 or 4 financial moves ahead. A client of mine signed a lease for a second location, and on paper it looked like a very smart move because she was going to be able to increase her capacity, increase her opportunities for generating more revenue, and then also just have more space for growing her company. But 3 months later, she found herself borrowing money from her line of credit just to make payroll. The lease wasn't a mistake. It was like making a chess move without looking at the full board and really understanding what that one move was going to impact 3 moves later. Great chess players do not just think about the move that they're about to make, they think about the impact that that move is going to have on the rest of the game. It's what financial leadership really is. It's not knowing what happened last month, it's understanding where today's decision is going to impact your business tomorrow. Financial leadership is the ability to connect everyday business decisions to how money moves through your business, creating predictable cash, profitable growth, and long-term financial stability. It's seeing what's likely to happen tomorrow so that way today you can make better business decisions. Owners ask me all the time, can I afford this? But that's rarely the question that they're asking if you really read between the lines. When someone asks if they can afford to buy another truck or hire another technician or to lease a second location, they're rarely asking about that initial price tag. If you read between the lines, they're asking, am I about to create a problem that I cannot even see yet? Financial leadership answers that question. It helps you see if you turn left, what's going to happen. If you take a right turn, what's going to happen. And you have the ability to weigh those options so that way you can see what's likely to happen 6 months from now based on that decision that you made. So every bad financial decision starts with one bad assumption, thinking that you can start with the amount of money that you see in your online banking system. Imagine your personal bank account on the balance on actual payday. It's a pretty big number because you just got paid. It sounds great, but you start to think, I am not able to spend all that money because I've got mortgage coming out later this week, my insurance renews, I've got a car payment, I do think I've got estimated tax payments coming up soon. Don't forget about the kids' tuition that needs to be paid for. That money was never really available. Even though you see it in your bank account, it's not really available for you to spend. And business bank accounts work the exact same way. That's why I teach the real cash balance framework. Now, it's not about what's sitting in the actual account, but what is actually available for you to spend after you consider payroll, income taxes, maybe even sales tax and payroll taxes, vendor bills, customer deposits, and your reserves that are needed to not only maintain your business, but to help the business grow. If you start with the wrong number, everything downstream, every decision after it is distorted and it turns into a bad decision. Here's where businesses quietly lose hundreds of thousands of dollars. They evaluate the purchase price, but not the ownership cost. A truck does not cost $50,000. By the time you've added the cost to get it ready for the road, you've got to wrap it with your logo, the tools, the inventory, and then you need to start the insurance policy. You've got ongoing maintenance, fuel, registration. That $50,000 truck easily turns into a $100,000 investment over a 5-year period. So financial leadership looks beyond that total payment for today for that initial cost, and it asks, what is this decision really going to cost me over the life of owning this asset? The wisest decision is rarely the cheapest decision. Replacing a truck isn't just about buying an asset. You're buying the ability to run calls without a truck breaking down. It's going to lead to less frustration, fewer customer delays in the schedule, lower stress just for the customer and the company and the employees, and just overall more capacity for growth. The truck creates values in ways that never show up on the actual purchase document. Financial leadership evaluates every investment through multiple returns. First, we're talking about your financial return, but you also need to consider your time. Is it going to help the company be more efficient? Is it going to save time not only for internally for your company, but then you also need to consider your customers as well. Is it going to improve the customer experience and save them time and make them happier and make it to where they're just raving fans? When you're thinking about your employees, are you reducing their frustration? Because the last thing your employee wants to deal with is a broken down truck on Friday afternoon when they're already starting to think about their weekend plans. And then just stress at the company level because you've got to manage how you're going to take care of the broken down truck. But when you think about the benefits of buying a new one, then that will help reduce the stress because you've got less breakdowns. And then also you need to think about strategically, is this going to help you really improve profitability and maintain your current level of operations? Or is this going to help you really move towards the goals that you have for your business? So that's how great businesses allocate their resources. The regret I hear is rarely I made a bad decision. It usually sounds a little bit more like I had no idea that this purchase was going to cost me so much money. I didn't realize that hiring a new employee, hiring that new position was just going to change everything. I didn't realize that saying yes to that one opportunity was going to mean I had to say no to something even better later on. Those aren't decision-making problems, they're visibility problems. And financial leadership brings tomorrow's consequences into today's conversations. Confidence doesn't come from hoping things are going to work out. It comes from seeing the road ahead before you actually drive it. Or if we stay with the chess analogy, seeing the board before you actually move the first piece. Financial leadership isn't another spreadsheet. It's the ability to think several financial moves ahead. When you do that, expensive surprises become rare. If this changed how you think about financial leadership in your business, please subscribe. Every week I share one practical framework to help you see 3 months ahead instead of 3 weeks behind, so you can actually run your business and know that it's going to be profitable instead of just trying to survive. Plus, I'll see you in the next video of this series because I will actually dive into my real cash balance framework. I look forward to seeing you at the top.